to these things, especially because Donald Trump is involved. I've been a big critic of his approach to dealing with world and global issues, and I think that the way he's handling this trade tariffs issue is one that's very brass. He doesn't care about the opinions of his trading partners. And luckily, we've got someone saying something sensible out of China. Obviously trying to say, we need to see more trade going through between both countries and more countries that are in the bigger trading bloc. Talking about the developed countries as well as probably the developing countries as well, benefiting from that, because when you talk China, you're talking about raw materials. Therefore, you're talking about guys like us, countries like South Africa, that purchase raw materials that get sold ultimately to China. So one does hope that the rhetoric starts to tone down at some point, and Donald Trump moves on to his next pet project.
Indeed.
Yeah.
And just tying in nicely with what you were saying about the potential for South Africa, as I mentioned, mining counters breaching that 3% level, and presumably that's part of the reason why they're up so nicely.
Oh yes, definitely. Remember when this news of the tariffs being levied on Chinese imports and imports from other countries, Donald Trump cited the steel space and the aluminium space as well. And obviously some of our counters, likes of Kumba, Exaro, Anglo, that have got exposure, Billiton, etc., to those actual minerals, they took quite a big knock out of those statements. And I see they're starting to recover today. They've been recovering for the greater part of the day, and I think that if rhetoric changes, like I said, we could probably see these counters trade even higher than where they're trading at the moment. Tariffs are really a difficult issue because all of a sudden it means that people have to start scaling back on the market share in that country, or they now start paying more to participate in that particular country that's levied these tariffs. And I think this is why China has actually retaliated and done the same with America. And it comes at a time when you're seeing Britain and Russia having this to and fro around their embassies, recalling of the diplomats in both countries either way, where we need a little bit more peace to take the economy forward in the world. You getting more of these disagreements among some of the biggest powers in the globe, actually, which is a very big concern for us. It takes away stability that we need very much in the market.
Is that why, part of the reason why we're seeing the Brent crude oil price hovering around 70? It was much lower in the recent past. Now it's flirting with $70 a barrel. Is it all to do with Syria and talk as well that President Trump may well decide to scrap the Iran deal?
Look, I mean, I'd say partially that's the reason, but I'd also venture to say the price of oil has been very volatile in the past 2 odd quarters. It's been moving between $70 back down to $65 and back again to 70, for whatever reason. So to an extent, I'd say that the Iran news is a contributor, but then again, with the rest of the market, today we're seeing a recovery in the global markets. The oil price also does now look like it's got a very high beta or a high relationship with the market. Whichever direction the market is moving in, people start getting confident. If the markets are positive, then they buy the oil price as well. And if the markets pull back, the price of oil has been coming down as well. So yeah, I mean, a few reasons responsible for that, but I'd leave it to the market, in my view, as being the determinant of where the price of oil is, which is not great for us at the moment if it continues to stay here.
Now, look, it's not listed, but it is an important company on the South African landscape, and also speaks to where the consumer is at. Edcon apparently was talking about the possibility of closing down their Edgar's store in downtown Johannesburg.
Yes.
That's correct. Although in the recent minutes I have heard from a colleague who's covering the story that they say Grant Patterson, the CEO of Edcon, has said actually that's not something that's going to happen. So it may well be that he said it on the sidelines, that they're contemplating it, but it seems to be off the table. But if that conversation were being had, do you think that it speaks to where the consumer is at?
Yeah, I would say so. I mean, Nompu, there's quite a lot of options now available to people out there. It's cotton on, Mr. Price has got now high quality stuff that's less expensive than what you buy from Edgar's. Positioning as well. There's now a lot of competitors that buys clothes from Asia and come and sell them in the city, particularly talking to this store.
Online?
You know, and online competitors as well. I mean, people are buying stuff on Facebook, buying stuff on Instagram. You know, I mean, it's quite important to note that competition has actually been very aggressive in the clothing space in the country. And I think that our pricing continues to favor the consumer. And for that reason, guys like Edgar's, Truett's, Foschini, I believe to an extent they'll continue to be under pressure if they don't diversify their lines of income. You know, for Edgar's, in my view, I believe there's a bigger story there to be told. The big story of the turnaround. How do you turn around this giant after it's been suffering from the past 10 years from underperformance? And, you know, it's way behind its bigger competitors when it was listed on the JSE, your Truett's, Foschini's and Mr. Price's. I think Edgar's fortunes have been rather worse off than its competitors. So Grant Pattison has got a lot of work to do, and we certainly wish him well, because there's a lot of money that went down the drain, in my view, when that private equity transaction happened.
Indeed. And very quickly, we see that the manufacturing number came out for February. Manufacturing production, it rose by 0.6%. Not very exciting when you consider that it rose by 2.3%.
2.5 in the previous month, yeah.
So what's your analysis of that?
It's a big miss. I mean, we were looking for 2.6%. For the reading today, but it came down. It came below our expectations by a full 2%, which is not great, because you're looking for signs to say the South African economy consistently getting out of the low growth environment. And I think if manufacturing numbers come through lower than expected, hopefully we get the mining numbers continue to show an improvement, at least, because people are going to start getting worried that the growth in GDP that we were expecting may probably falter if you know, manufacturing doesn't sustain its growth. But then again, it's a once-off number. Let's see how that number looks next month. Then we can start getting worried if it deteriorates further.
All right, so after that relief rally